Welcome. In this video, will Zbcn coin price explode upwards? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we examine the chart, we can see that the price has been under downward pressure for some time, forming clearly lower highs and lower lows, indicating a well-defined downtrend structure. This descending formation signals a critical turning point in investor psychology. The downtrend line serves as a technical boundary, clearly showing that the supply side of the market is dominant and that buyers are struggling to push the price higher. However, the end of every downtrend can lay the groundwork for a potential reversal. This is exactly where critical developments may occur. This downtrend line has typically been reinforced with numerous contact points. Each time the price approaches this line, renewed selling pressure and subsequent pullbacks indicate that it serves as a strong resistance. However, each contact also suggests that the trend line may be weakening. When prices touch a resistance level multiple times, the sell orders at that level begin to be absorbed. This means the level may be easier to break on the next attempt. If the price manages to break above this downtrend line, it would be a significant technical signal that the downtrend has ended and that a new upward trend may be beginning. Such a breakout has the potential to attract not only short-term traders, but also medium and long-term investors. Trend breakouts are often viewed as the initial signal of substantial price movements. For a trend breakout to be considered successful, it's not enough for the price to merely cross the trend line. It also needs to close above it and be supported by volume. A breakout accompanied by increased volume indicates that the move is genuine and that investors are truly willing to open positions above that level. If these conditions are met, the price may eventually pull back to retest the broken trend line. This retest is an important structure that confirms the level has flipped from resistance to support. It's also important to remember that a downtrend line is not just a visual boundary on the chart, it's a concrete reflection of investor psychology. Every trend line embodies investors' fears, expectations, and profit-taking tendencies. Therefore, a breakout to the upside signals not only a technical shift, but also a psychological one, where investors begin to favor upward movement over continued decline. The strength of the price action following the breakout depends largely on the length of the consolidation period before the breakout and the degree of compression. If the price has remained within the downtrend for an extended period and the range has become increasingly narrow, the resulting breakout could be much stronger. These kinds of squeezes often lead to explosive price movements with high volume. Another point to consider is the slope of the trend line over time. If the downtrend is very steep, a breakout may occur sooner. However, a more horizontal and prolonged downtrend breakout tends to indicate a more solid and lasting upward movement. Such structures suggest that the market has gone through a deep consolidation and is preparing for a new bull cycle. In conclusion, the current downtrend line in the chart represents a highly critical area for the price. A breakout above this line would signal the end of the bearish trend and could significantly strengthen the upward momentum. In such a scenario, investor risk appetite would increase, position sizes would grow, and the price would begin to test new higher levels. But we can't base decisions on trend lines alone. Let's also take a look at other metrics. Stay tuned. When we take a closer look at the chart, it's evident that the price has been forming lower highs for some time. And when these structures combine with a horizontal support level, they create a classic descending triangle formation, frequently observed in technical analysis. These types of formations typically signal a crucial decision point among market participants. The upper line of the triangle, or the descending resistance line, shows that sellers are applying pressure at lower levels, with each rally falling short of the previous high. On the lower side, there is usually a horizontal support line indicating that buyers step in and react when the price approaches this level. Descending triangle formations often reflect periods of uncertainty among market participants, during which volume decreases and volatility narrows. This situation provides an early signal that a significant breakout may be imminent. Especially as the triangle narrows and volume declines toward the apex, a directional move becomes increasingly unavoidable. While these triangles are generally perceived to have a downward breakout potential, there are also strong upward breakout scenarios depending on the prevailing trend and overall market structure. In the current chart structure, we can observe that the price has tested the descending resistance line, the upper boundary of the triangle, multiple times, facing selling pressure at each attempt. However, over time, the impact of these sell-offs seems to have diminished, with more frequent touches on the resistance and candlestick wicks starting to challenge the line. This suggests that the resistance is weakening and that buyers are becoming more aggressive. If the price manages to break above this descending resistance line, it would indicate an upward breakout from the descending triangle formation, which could be interpreted as a bullish breakout. Such a move is typically accompanied by an increase in volume, potentially leading to a sharp upward price movement. This scenario could trigger swift action from investors who have been patiently waiting during the triangle formation, thereby accelerating the bullish momentum. In technical analysis, the breakout target of a descending triangle is calculated by adding the vertical distance at the triangle's widest point to the breakout level. The resulting figure is considered the first potential target price. However, for the price to reach this level, it is also important to go through a confirmation process after the breakout. For example, if the price breaks out and then pulls back to test the broken resistance line as support and subsequently bounces upward, this movement is called a retest and is seen as a positive sign for trend continuation. In summary, the descending triangle formation we are observing is not just a visible pattern on the chart, but also a reflection of market psychology and investor behavior. A breakout above the upper boundary of this pattern signals not just a technical level being surpassed, but also that the downward pressure has ended and buyers are beginning to take control of the market. If this breakout is supported by volume and followed by a steady upward move, reaching the descending triangle's potential targets becomes a realistic possibility. At this point, proceeding carefully and with discipline is essential to properly interpret the breakout and to maintain solid risk management. In technical analysis, no pattern comes with a guarantee. However, when a formation is supported by a correct reading of market psychology and other technical tools, it can provide investors with very strong signals. In conclusion, the descending triangle formation in front of us represents a key technical structure that should be monitored closely. A careful examination of the chart reveals that one of the characteristic features of the Bollinger Band, the band squeeze or narrowing pattern, has begun to form. In technical analysis, this narrowing is often considered a harbinger of a major upcoming price move. Bollinger Bands are a technical analysis indicator that moves based on volatility, and the more volatile an asset's price is, the wider the bands get. If the price is calm and trading in narrow ranges, the bands tighten. This compression means that the price action, which is stretched like a spring, is accumulating energy and may break sharply in one direction in the short term. Looking at the current market conditions, it is clear that the price action is moving close to the middle line of the Bollinger Band, and the upper and lower bands are very close to each other. This suggests that price volatility has decreased significantly and uncertainty in the market is at its peak. At such times, the vast majority of traders are cautious, reducing their positions or waiting for a breakout to open new positions. This waiting causes an accumulation of energy within the Bollinger Bands where the price is stuck, and eventually this energy will be released in one direction or another. We should wait for the price to break out. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.